We've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So,
you are tearing me apart, Lisa.
Hey guys, Ralph here from the Endgame Investor, and we saw some serious action in the markets yesterday. I wanted to frame this as what I think is happening. I don't think this is the big one because there's still dollars left in the system. The reverse repos have not run out yet. We're still at about 110 to 130 billion of those. So there is some liquidity left, and I don't think we're going to crash to zero tomorrow, and I don't think gold's going to infinity tomorrow. However, what I do think happened is that the Federal Reserve, in the form of Jay Powell's press conference, sounded a little bit unprofessional. And in his press conference, he said that it looks like his predictions on inflation have kind of fallen apart.
we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So,
and you see who's in the background there? Somebody wearing a mask. These are the people that are listening to economic projections by Jay Powell. These are the people that are supposedly in charge of the monetary system, of the reserve currency of the world. These are mentally ill people. People that still wear masks are mentally ill people, and they should be far away from any influence on anything having to do with anybody's life. Anyway, whenever the Fed admits to its predictions falling apart, people get nervous. And this was interpreted as an uber hawkish statement or a very hawkish press conference and series of comments. What actually happened is, well, imagine a junkie in rehab and they're weaning him off slowly from his supply of drugs, and he is told that he's going to get a little bit less of a supply than he thought that he would, and he freaks out. Well, what do you think is going to happen when the supply of drugs actually runs out and we have a real dollar crisis with no liquidity left in the system, when reverse repos are zero and there actually is a bona fide dollar crisis? That is going to be much worse than what happened yesterday. What happened yesterday was just a preview of what will happen when we have the final liquidity crunch. And from there, the Fed is going to have to print like there is no tomorrow, because there will not be a tomorrow for the dollar at that point, and we will head into the end game. The other thing I wanted to say is that people are asking me, should I sell all my stocks now? What do you think? Is this the end game? Look, how many people in finance have made their careers on amazing timing calls? They've had movies made about them, and they're quoted in the papers and all the other publications that write about finance for the rest of their lives. Well, they make their careers on one big call. For example, take Michael Berry of The Big Short fame. He made a great call in the 2008 financial crisis, and now he's quoted every time he makes a big move. Everyone follows him. How many times has he been right on timing since 2008? Not many, if any. The point being, you can only be right on timing so many times, and if you are, you suddenly think that you are a god, and other people think that you are a god, and it reinforces a god complex.
Are you a god?
I'm a god.
You're God.
I'm a god. I'm not the god.
And you end up stumbling over yourself, and it's not good for you. So I am not in stocks. I've never been in mainstream stocks since I understood about the monetary system. If I say sell your stocks now and I'm right, then I am proven a genius and I get a god complex and people think I'm a god, and I'm not a god.
No.
Then.
And it'll get to my head and I'll ruin myself. So I'll just say that what I am investing in is the end game. That's all that I'm sure is going to happen. And once it does, I'm not going to be in this business anymore. I'm not going to keep trying to call tops and bottoms or whatever it is. It's never really what I tried to do here. I try to prepare people for the end game and get them to understand the inevitability of it. Because, once I am proven right, it's not going to get to my ego, because it's going to be ugly and it's going to be sad. It's going to be happy for some people as we can help rebuild society. But this is not going to make me famous. I never had any intentions of that. And so I'm not trying to time things and build a finance career for myself. But anyway, what do I think was the most important outcome of yesterday's market action? I think that is interest rates, because long-term interest rates are headed higher now. We have broken key technical levels that suggest that rates are headed much higher from here, which I've always suspected, and I've been waiting for these technicals to break. I'll show you what those technicals are in a second. But basically, what you need to keep in mind is that the dollar is backed mostly by bonds, mostly by debt. When the value of that debt falls, the dollar falls as well. The value of that debt is falling now as interest rates rise, long-term interest rates rise, because most of the dollar is backed by long-term bonds, not by bills, not by short-term debt, but by long-term debt, thanks to Operation Twist and other things like that. When the value of that long-term debt falls, the dollar falls as well. And so we are headed for higher consumer prices as interest rates rise. So what are those technical markers? I'll show you to them right now. But before I do, if you'd like to sleep soundly and not worry about your stock portfolio, get a Dirty Man safe. Use code ENDGAME10 at checkout for 10% off. Link in the description below. And support this channel. You can also wrap your Dirty Man safe in carbon fiber paper that you can get on Amazon and wrap it there, and it will block signals from metal detectors, which means you will be able to hide your gold and silver in plain sight without anyone ever noticing. Don't hide all of it in there, but some of it as a good backup to wherever else you have any stored. Once again, that's ENDGAME10 at checkout. Check the link in the description below. In this first chart, we can see that the downtrend line in yields has been broken. The downtrend line was established in October 2023 when long-term rates peaked at about 5%, and we've been heading down since, but that trend line has been broken as of this week. Not only that, but we see here that we have established a pattern of higher highs. We're at 4.52 right now. The high of November 11th, 2024 was 4.51. So not only have we broken the trend line, we have established higher highs here, and we will head higher and higher still until the dollar collapses. I don't think we are going to go below this 50-week moving average, and I'll show you that now that we have reestablished that as the support for yields. So we see here that the 50-week moving average has been support since 2021, since around July 2021. We bounced off of it here and here in late 2021, before 2022, and here in April 2023, here in October 2023, and we lost it over here when bonds started to regain a little bit of value and a little bit of a reflation. But we have regained the 50-week moving average here and bounced off of it, strongly establishing new highs. The other thing I wanted to point out is that due to the rise in 10-year yields, the yield curve between the 10-year and the 3-month bill is now up to 17 basis points. We have moved to 172 basis points in 4 months. This is a very quick pace. It is a pace that we have seen before. We've seen it before in 2000, to be exact. That was from December 14th, 2000, when the yield spread was 88 basis points negative, moved to 85 basis points positive by April 3rd, 2001. That's about 4 months. And 172 basis points. So we have seen this before. We know what comes next, and that is a Keynesian-style recession, the revelation that people's wealth that they thought they had is not actually wealth. It is evaporating. It is a bubble. And once that bubble pops this time, in order to reflate it, the Fed will have to blow it up until it explodes, and nobody wants the money or the money derivatives in which the bubble is denominated anymore, and they move to the ultimate anti-bubble asset, which is gold and silver. It is not Bitcoin. Bitcoin is the ultimate bubble asset because it's on top of every derivative underneath it. Gold is beneath every derivative. It is the basis for every money derivative, no matter what order that derivative is. And so in the end game, all of the derivatives will pour their purchasing power into money itself, upon which the reset will have happened, and we can rebuild a society that makes a lot more sense in the future. This is Rafi, the Endgame Investor, explaining the small little sneak preview we got of the final dollar crunch, which is going to happen within the next few months. And once it does, the Fed will cut to zero. QE will be about $6, $7, $8 trillion, whatever it's going to be. The dollar will die, and we can move on with our lives without masks.
It's kind of fallen apart as we've approached the end of the year. So
That thing came apart